Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update with yours truly on this triumphant Tuesday. And as always, if you are new around here and finding yourself on the channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that's exactly what we intend to do in this video. We're going to start the video off with a little bit of technical analysis. We're going to be taking a look at Bitcoin, addressing once again some of the frustration I feel many people have in relation to the cryptocurrency markets, and kind of reassure people that actually there's nothing out of the ordinary here for the cryptocurrency space. This is quite commonly the sort of emotional pull that we see in and around this time in Bitcoin and crypto more broadly's cyclical cycle. So we will be doing that to start the video off. We're going to be talking about an interesting article that was released from the FCA, which is the United Kingdom's financial watchdog. They have released an article yesterday saying crypto asset registration building strong foundations, where they come out to be rather, or certainly appear to be rather accommodating to the cryptocurrency space and the industry as a whole, which is only going to blossom and really embed itself in our day-to-day lives. On the topic of that, we will be looking at some news from Chainlink that have just enabled private transactions with their CCIP. Now, Chainlink is a cryptocurrency that most people are massively sleeping on. And I'm not sure why, because it is going to be, in my opinion, how the traditional financial world and the cryptocurrency world essentially merge. It's that connective tissue. And there's comparables with the internet or prior technologies and kind of a standard that enabled them. Chainlink very much is that. We'll be looking at their recent announcement with one of the largest banks in Australia and more broadly the world. Or group of banks, the ANZ, which is the Australian and New Zealand Banking Group. Chainlink, of course, partnered with Swift and have been for a long time to essentially enable Swift to be able to use and utilize the distributed ledger space. So Chainlink themselves aren't going to be the ones doing all the remittances and the tokenization and this and that and the other. What they're going to be is the people that essentially correlate the space together and ultimately enable some of the layer ones that we know and love to actually do that. We're going to be looking at Eric Balanchunas' recent take on IBIT, which is a BlackRock ETF. You can see this is coming in regards to the third position in relation to year-to-date flows. Only third to the likes of VOO and IVV, which are both S&P ETFs, which we're going to be looking at. Very, very impressive. Also, stocks done very well on the kind of initial rate cut. We'll be talking about cuts once more, really kind of dispelling once again that narrative that when they cut rates, that means doom and gloom for the markets. If you take a more measured and zoomed out approach, this is simply not the case. We're going to be talking about money market funds and how we're still yet to see a lot of capital trillions. There's 6.5 trillion in money market funds. I don't think all of that's going to flow back into the space because a lot of it's corporate actually finding itself back into the cryptocurrency space or investment space more broadly. And then we're going to be talking about a Ripple co-founder, Chris Larsen, who's caused outrage in regards to his donations to Kamala Harris. I always get chewed up for saying her name wrong. It's not deliberate. And I want to make this point clear, even though I've come out and I've been penalised for it massively. I've came out and said, look, I think Trump's going to win. I think he's, in my opinion, the better candidate. That doesn't mean I hate people that vote for the opposition or his opposition. And remember, I'm not an American citizen. I uphold everyone's right to an opinion and their opinions, even if they do wind the hell out of me up because they're unfactually based. Anyway, Bitcoin has been, to start the week off, a little bit sluggish, but I want to reassure people that it is going in that broader direction. And it's just a case, we've really been pulling back since March. This has really ground the crypto communities to fatigue, to exhaustion. And this is what the institutions want, ladies and gentlemen. Understand the context of the chart and the direction that it's pointing in. Put on the armor of technical analysis and you shall be fine. Bitcoin is in a very clear uptrend that we continue to reiterate. Don't bet against the trend. There are also multiple technical patterns that all point to upside continuation. And in my opinion, Bitcoin has now broken out of its broadening channel. You could perhaps look at it like this and say it's potentially still pinned below it, but it will push through it eventually, in my opinion. when we look at the total market cap, this has very much pushed through any kind of capping resistance, along with total 2 and total 3. And ultimately, we see bull flags across the board. This is total 3. Even in regards to the total cryptocurrency market cap, that ultimately give us that inkling that the next leg is upon us. We're just not quite at that takeoff position yet, but it will come, ladies and gentlemen. Sit tight. Your altcoin, I believe, will be rewarded. Something like Chainlink, there's lots of positive sort of signals that we're getting in the altcoin market. I did a great update for the Patreons on Sunday. Well worth a watch if you decide to become and take that step to become a Patreon today. Ultimately, we're very happy with technically where Bitcoin's at, and we don't see any kind of a reason to panic. And in regards to what we've seen fundamentally throughout this pullback, we've seen continued accumulation from the institutions through the ETFs. We've seen whale addresses accumulate at a never seen before rate. There'll be an ETF crossover there, I'm sure, undoubtedly. We've also seen exchange reserves get continuously drained. And there was news that I was looking at last night in regards to open interest, which is interest in regards to people speculating typically on future positions on the direction of Bitcoin. And it's all as it's coming to this kind of turning point, seeing lots of positivity in relation to the altcoin market. Remember those ETPs that we spoke about there doing very, very well? Grayscale's ETP has now given us that erectile projectile and ultimately broken out and triggered what we believe is a broader pattern. And this is an index of multiple altcoins. They recently filed for an ETF. This is going to go on a kind of Grayscale Bitcoin journey that we also predicted here on Allincrypto. So technically, we think the market's in a great position, even if there is some sort of frustration in relation to the kind of stagnation, certainly in the altcoin market, that's causing a lot of fatigue out there. But your fatigue, I do believe, will turn to sort of a joyous time, in our opinion. So this is from the FCA, the Financial Conduct Authority, the financial watchdog, kind of like the SEC, our equivalent in the UK. They recently released, as recent as yesterday, an article saying crypto asset registration, building a strong foundation. Our standards are setting the stage for a thriving competitive crypto sector in which people and our financial markets integrity are protected. This is very, very interesting. And they talk about relaxing our standards and creating a race to the bottom also won't ensure people and our markets are protected or even work well. Innovation built quickly on unsafe, unregulated, and untrusted foundations become a house built on sand, and they're referring to the likes of FTX, likely to collapse. Instead, we want to closely collaborate with partners across governments, industry, and other jurisdictions to develop a crypto sector that's built on reliable, sturdy foundations. By doing this, we can ensure security and sustainable growth for years to come. They sort of start with, we never turn applications down out of hand, and so on and so forth. So they are looking to sort of be more accommodative, generally was the gist of this, but also still not just sort of relax anything. And certainly with Labour in charge, they're not going to give anybody a break, I'm afraid. This was absolutely insane news. So Chainlink doesn't get as much recognition as it truly deserves. It is a fundamental part of the cryptocurrency space. It has been thus far. I remember I've been in this space, first stumbled upon Bitcoin in 2012, but I won't tell you the story behind that or anything to do with that broadly. I think we've mentioned it previously. Got back in 2017. Chainlink was one of my biggest investments during the bear market. I think it was a Tika Tawari pick, right the way back then. And I know there's a lot of negativity towards that individual. We're not saying anything towards him at all in regards to our opinion. What we are, I think that's how I first heard of Chainlink. And when I started to look into it, I really understood it and understood the fact that Chainlink is a great example of the broader application of a distributed ledger. They enabled DeFi as we know it today by essentially enabling blockchains to get off-chain data, which is an inherent problem that they all face. So Chainlink is fundamental in regards to the space as a whole, the DeFi sector, and the space more broadly, and is only going to become, as more use cases that need real-world information, even more embedded in the industry as a whole. But it's now doing far more than that. It's actually becoming the connective tissue between the traditional financial system and accessing the cryptocurrency space. And that's what their CCIP is all about. And they announced, this isn't even 24 hours old, ladies and gentlemen, this was announced at 5 a.m. my time, so UK time, today, We're excited to announce CCIP private transactions enabling financial institutions to connect private blockchains to multi-chain economies. Australia and New Zealand's banking group, ANZ, will be amongst the first financial institutions to pilot the capabilities of cross-chain settlement of tokenized real-world assets under the Monetary Authorities of Singapore Project Guardian initiative. Chainlink's new cross-chain privacy capabilities have the potential to further accelerate institutional blockchain adoption by enabling end-to-end privacy between blockchain networks. And Nigel Dodson, banking service, his lead at NAZ, through our ongoing collaboration with Chainlink Labs, we are looking forward to piloting CCIP and demonstrating how the long-standing privacy problem can be addressed. The 4 releases here. Here's how it works. The new blockchain privacy manager enables private blockchains to integrate with public Chainlink platform while maintaining data confidentiality and supporting regulatory compliance. With this new capability, financial institutions can now leverage Chainlink to connect private blockchains to public chains. There's going to be a mix here. I think public chains are going to be the larger. Private chains, external data resources, and TradFi systems, while only revealing the on-chain. This is going to happen through sort of roll-ups. Information selected by the institutions by being necessary to process each transaction. CCIP private transactions build upon the capabilities incorporated a novel on-chain encryption protocol to enable confidential transfers between multiple private chains and keep transaction details entirely private. So this is a big step. Chainlink's going to play a key role. There's a new financial system that's coming. They just haven't told you that bluntly yet because they don't want to cause any panic to the masses because they don't believe that they can handle it. Let's move on to Eric Ballantyne. So this huge new Chainlink is a big part of my portfolio, actually. It has been for a long time. Ultimately, we're out of it in 2022, but got back in quite heavily, certainly during what we're seeing. From a technical point of view, Eric Ballantyne is here highlighting that IBIT had a hell of a week last week. Again, all coinciding with this pullback kind of being over in our opinion. And he then goes on to highlight the rest of the top 5 is each over 20 years and old and over 300 billion. IBIT AUM is 32 billion. Which is in the top 2% of all ETFs. It's been nothing short of a success, and this is only going to continue. And this is because Bitcoin is part of a greater plan. He also highlighted yesterday a roaring stock market, nor a 50 basis points, that was the last cut, has been enough to coax investors out of cash, as money market funds remain at peak levels of 6.4 billion. Probably when rates get to 3%, that may do the trick. But to be fair, it's a bit baffling that some hasn't left the sidelines yet. And that's because they're still getting that pretty insane return. And there are currently 6.5 trillion with a T dollars in money market firms. It's currently getting that nice return from the likes of the debt market. That ultimately, I think a large part of that's going to come back into the markets. And what we're going to see on the back end of that, you've got to remember there's a lot of the sort of printing that's going on in regards to the debt markets is the markets continue higher. This is a narrative that we're yet to see take place. We ultimately think our macro driver is that when they drop rates, it's a good thing for markets more so than it's a bad thing. It's a bad thing if it's on the context of a crash like the 2 anomalies over the past 14 times we looked at the S&P's returns. A year after the first rate cut was 2000 dot-com crash, 2008. So we genuinely think we've got a great time ahead of us, and there's $2.5 trillion that's ultimately, or $6.5 trillion that's ultimately going to come out of money market funds. We don't think 6.5, but certainly a couple of trillion is more than imaginable, which is going to push the markets even higher. Outrage within not just the XRP community, but the community more broadly, as Chris Larsen, the co-founder, who currently has a lawsuit against him by the same party that essentially, has gone after Ripple. He recently donated $10 million in XRP to Kamala Harris's campaign. This after having donated more than 11.7 million in September. So he's donated a hell of a lot of money to Kamala Harris. He said it's time for a Democrat to have a new approach on tech innovation, including crypto. I believe Kamala Harris will ensure that America's technology donation dominates the world, which is why I've donated $10 million in XRP in support of her. Very interesting. Brad Garlinghouse's reply here. I respect Chris and everyone's right to support whoever they think is best to lead. We need imminent change. etc., etc. Ripple continuing to engage with Democrats and Republicans. Of course, they're going to hedge their bets, and I think that's really all that is going on here, in my opinion. So that is it from me, ladies and gentlemen. A lot going on. Get ready for the future, because it's coming at a very fast rate. There's going to be a global reset that's ultimately going to involve the cryptocurrency space, and we want to make sure everyone's well aware of that and can hopefully arbitrage and capitalize on some of the innovation that is in front of us. That's it from me, guys. I'm going to love and leave you. Thanks for watching. See you all in the next one.